Are you ready?
Ready.
All right, let's go. Kevin here, top 1 financial advisor and best-selling author. We are here to talk about the stock market. Today, I want to talk about Mullen Automotive because I have been taking notes and a lot of y'all are talking about this company, so I got curious. What is it? What do they do? And what do we need to know about Mullen Automotive and whether or not it makes sense to invest in? So I'm gonna just go off my notes, tell you what I quickly looked at, and then give you my quick thoughts. Now, if y'all want a deeper dive breakdown and for me to spend, I don't know, an hour or two to really dig into the info, feel free to let me know in the comments. So this is my first reaction of what I looked at, what I found, and my thoughts about Mullen Automotive in case you are interested or just want to know what in the world everybody is talking about. Alright, so Mullen Automotive is an automotive company. They are an EV, electric vehicle company, and they've gotten a lot of buzz in the last few days. However, the stock is down well over 90%. It ain't going well for Mullen Automotive. Now, you may be thinking, well, look, I mean, the stock is less than $1. It's clearly crashing. Why are you spending your time talking about it today? One, because y'all ask about it. But number two is it is in one of those positions where it is one of the most shorted companies and people are looking to get yet another short squeeze. Now, if you haven't been around for a while and perhaps you just missed all of 2020, which that was a good year to miss because it was a crazy time. But if you missed all of that, here's what a shorted company is. And Mullen, I think it's like top 2 or 3. 47% of all the shares that are out there have been shorted for Mullen. So here's what it is. A short squeeze is essentially when you get some hedge fund, some institution that borrows the shares and sells them on the open market thinking they can come back and buy it for cheaper because they think the company is terrible. And there are some things that would suggest that Mullen Automotive is one of those. However, think about a lot of the companies that haven't done well. Carvana is in the top 5. Carvana we've talked about before that has not done well. And essentially, look, if I can borrow shares from somebody, sell it high, and if I know it's going to crash, just buy it back for cheap, then I make the difference between that. That is what's called a short squeeze. However, what happens when this goes wrong? What happens when a short squeeze or, selling short goes in the opposite direction and the people who borrow those shares have to pay more for them? That is what's called a short squeeze, and when that happens, you get GameStop and you get AMC. This is how all that stuff started back in 2020. Well, now Mullen is one of those targets. However, with the EV space, we know that EVs, electric vehicles, are the wave of the future. We know that Tesla made it. Can Mullen Automotive do the same? So here are my thoughts based on what I read from Mullen themselves and their financial statements and just some things that you might want to know. So one, 47% of the shares are shorted. That is extremely high, and this could be, in my view, a good target for a short squeeze. The problem with a short squeeze is you don't know which one of these companies is going to be the next GameStop, if it is going to be one at all. There are companies that are shorted all the time and have been doing so for decades and decades, and only 2 of them you've ever heard of, and that is GameStop and AMC, and maybe Hertz. That's it. Of the thousands of companies that get shorted every single year for the last 20 years, right? So it's rare for this to happen. But also, and I've said this before too, I think it's very difficult for every new electric vehicle company to beat Tesla. Like, it ain't but so many Amazons, it ain't but so many Googles. Everyone can't be that, right? Same thing with social media. We only had the big 3 in the United States for a reason. General Motors, Ford, and Chrysler. And that was it. Because the space is not that big. It's expensive to build a car from the ground up and then sell it and get it out there for people to like and then do it on a global scale. So when you think about it, yes, we got Tesla out there. You got Ford and GM definitely trying to catch up. You got all the foreign vehicles in terms of Mercedes. You've got Honda, Hyundai, and others. And then you got other U.S. players like Rivian, Lucid Motors, and what's the other one that failed? What's the name of that company? Nikola. that's another one. Those are just the ones that came off the top of my head. So that's 3 electric vehicles that are brand new, EV producers that are brand new, with the legacy producers in the US versus Tesla, and all these things happen at the same time. Every last one of them can't win. And I, to this point in my life, have not seen a Mullen Automotive vehicle in real life. So I think they're in last place, or one of the ones in last place. I've seen Rivians, a few of them here and there. Now, all the negative stuff out of the way, Mullen did just recently, I think in the last 3 to 4 days, did get an order for $200 million to make 6,000 vans for a company, and that is supposed to start production in 2023. Last I checked, 2023 is around the corner. Now, $200 million is important, and that is because of this. Here's a balance sheet. Mullen Automotive has $78 million in debt compared to only $17 million in assets. Okay, $78 million in debt, and you only got $78 million in assets. Not just cash, in assets. So that is a problem. However, some of that can be resolved in 2023. Now, they're not going to get $200 million up front. So that's something that you do want to be aware of. And also, just because you get one big deal does not mean that it's going to save the stock. How do we know this? Remember that Rivian got I think it was 100,000 vans that they were supposed to do for Amazon, and that was going to be a big thing. Well, Rivian is still down, what, more than 70%. Now, negative 70% is better than negative 90, but they're both major losses, and both of them have major commitments from outside companies promising hundreds of millions of dollars to produce X amount of electric vehicles. So we'll still see there. The other thing that I am most concerned, at least from my perspective, for Mullen, if I was considering investing, is this. Their losses are widening. So for example, here we have in 2020, you can see that they lost, so we're talking about losses, they lost $6.89 million in 2020, and that has expanded to $59 million in 2022. So you're looking at losing $7 million 2 years ago, and now it's exploded to close to $60 million in 2022. 2 years, and those losses have exploded. So there's a lot of stuff going on here. They are taking on a lot of debt. And they've been around, depending on how you want to look at it, for a while. They are a SPAC, that is a special purpose acquisition company, also known as a blank check company. I've done other videos on that if you're not sure what that is. But essentially, somebody said, hey, let's just create this company, and we're not going to go through the regular going public process. They eventually merged and created Mullen. The 2010s when the SPAC was created, technically it became Mullen, quote unquote, in 2018. So I don't know how you want to count that, whether they've been around for 12 years or whether they've only been around for 4. But in either case, it is common, okay? It is common to lose money in the first few years, especially for an expensive venture like this. Rivian is also losing money. Nikola famously is losing money, and so is Lucid. They're all losing money, both from an actual monetary perspective and also from an investor's perspective. So do be aware there. Here is a thing that I think is perhaps most important as I'm just checking my notes here. What I don't want you to do, what I don't want most people to do, rather, is just to buy into something just because of the possibility of a short squeeze, okay? I don't think that really makes sense. And essentially, I saw this on Pub the other day. That's essentially saying that I am going to go and search on Amazon for something and choose the thing that's the worst rated. And hopefully people get mad and ask for enough refunds and I can get my money back or something like that. That's kind of how that works. It just doesn't really make sense. The reason that this company is a reason the company is shorted for a reason. Would you buy or invest in somebody who has $78 million worth of debt and only has $17,000 in all assets, everything? That's a lot of debt, right? You cannot pay those bills unless this particular client comes through. And even if it does, even if you do get, what is it, $200 million up front, you lose it close to $60 million a year. How long is that going to last you? And how are you sure that those costs aren't going to explode even more in the next year once you actually start producing stuff? I don't know. Right? These are questions that I would ask if I was an investor. So it's really, the real answer here is, for me, it's obviously a no. There's a reason why the company is 27 cents, 25 cents, or whatever it is. Even Rivian, which I also probably wouldn't invest in right now either, even Rivian is at least $20. That ain't great, right? But at least that one is a good comparison of a company that's relatively recent, relatively new, also went public, also losing money, but hey, I can at least point and say, oh, I've seen a Rivian in person before, and I can say, hey, at least they could actually produce cars, unlike Nikola, who, you know, is going through their own issues. It hasn't really produced anything up until this point. So two lessons here. Number one, you always have to ask, if a company is down, if a company is less than $5 in my view, why is it there to begin with? Like, really think, like, why is it there to begin with. And then two, always compare it to its peers. I don't think Mullen or Rivian or Lucid or Nikola should be compared to Tesla at this point. You might want to compare it to Tesla in year 2, 3, or 4, but you don't want to compare it to where Tesla is now, where you can see a Tesla, throw a rock and see a Tesla at this point in time, right? So you want to go back and compare it to where it was. Be safe and really go through a logical process, because this is money. This is finance. This is not an emotional, I'm going to stick it to the man just because. People did that and lost their shirts in 2020 because they thought they wanted to do this stuff for a cause. No. This is your money, okay? And there are plenty of companies that are making money even now in 2022. We've covered a lot of them. We've covered dividend stocks here. We've covered companies that pay dividends that are also doing well, up 20-30% in 2022, and none of them are losing $50 or $60 million a year. You don't have to do that. That's not the way that you have to make money in the stock market. That is the riskiest way. That's the scariest way to do it. And you're really hoping on, at least from my view, from what I've seen, just like it was for GameStop, just like it was for Hertz, just like it was for AMC, you're really just hoping on a frenzy to bid up this company and really stick it to the man and beat the short sellers. I mean, if it works, it works. It worked twice in 2020. I don't know if I want to bet on it working a third time in 2022/2023 when everybody knows what that game is like. But again, at the end of the day, pay attention to what the company is doing. Have you seen a Mullen Automotive vehicle before? No, you have not. Okay, is the company financially healthy? No, it is not. Are they selling more stuff outside of that one order? The answer is no. And I don't know if that makes the absolute most sense to take on that much risk by investing your money in what is right now a garbage company. Notice I say right now. 10 years, maybe there'll be something. We'll see. But very, very rarely. Very, very rarely. I mean, extremely rare. I cannot put rare enough in this video that a company that is just pennies on the dollar becomes the next big thing. It almost never happens. And while you're waiting on that, there are tons of other companies that are totally fine, that are continuously growing, and many of these that we have talked about on the channel before. So those are my thoughts. I'm not paid in either way. I don't make money whether Mullen goes up or down. It doesn't make me no difference. Okay, I'm just giving you what my thoughts and opinions are from a 30,000 foot view and from their own statements and things they have put out there in terms of how much money they've made and how much they have lost. All right, that is it for me. If you want to learn more about the stock market, feel free to join our members only. If you want to learn about what other stocks are out there that actually make sense and make money and can pay you in dividends, then join the members only. I covered a few stocks that we talked about last week and even the week before for great dividend paying companies that have been solid. I don't have to sit here and lose 90% on my money. I don't feel like doing that, and I don't think you do either. So therefore, you need to be inside the members only. All right, that's it for me. Talk to you later.